All right, Kunj Bansal joins us. Half an hour of trade left, 30 minutes actually to be precise, and markets are not looking bad at all. Kunj, how you been? Long time?
Oh, oh, all well, the markets are keeping everybody happy despite so many ups and downs and news flows and volatility and global money volatility. Market is able to keep its head up. Nifty large cap indices are close to lifetime high, and so is the interest in the mid and small cap continues. Of course, the volatility keeps coming in between, which it should also, because without that, the broader money doesn't get a time to get in into the market, and every correction offers that opportunity.
All right, let's actually take it across to Ansh, who is standing by to talk about what are the stocks that are seeing price volume action in today's trading session. And Ansh, which are the three stocks that you're going to talk about today?
Right, so starting with Aditya Birla Fashion, the stock is in focus that it has given a breakout from its resistance of 270 to 275 level, where it was facing strong resistance previous month as well. Also, the stock has touched 1 year high with volume of over 4 times its average trading volume of last 10 sessions. Apart from this, Hindalco will also be in focus as the stock has actually given a breakout from its key resistance zone of 665, touching record high level with volume of over 2 times its 10 session average. NCC is also in focus as the stock has actually given a breakout from its upward sloping resistance zone with volume of over twice, touching record high level as well. Lastly, HPCL will also be in focus as the stock has actually given a breakout from its 7 session consolidation pattern with volume of over 40% its average trading volume of last 20 sessions. So keep an eye on the stocks.
A portfolio strategy in the run up to the budget. Are you buying puts? Are you raising cash, or are you simply fully invested?
Is that question to me?
हाँ जी, एक ही कुंज है शो पर, दूसरा निकुंज है.
No, sorry, I couldn't hear that word, Kunj. Yes, Nikunj is there. Yes. Sure. So we have repeatedly seen that it's always difficult, in fact, impossible to take a call on the market timing, indices movement, and all. Even if somebody is able to take the call at few times, it's not always that one is able to take a call at the 100% of the times. So as a result of that, it's always better to have a uh, divided strategy. By that, what I mean is that one, depending on his risk profile, should segregate his investments into two buckets. One is the long-term investment that one will continue to hold uh, and will be able to recover, that will ride with the market. The other is a smaller part of the portfolio, which one can call a trading part of the portfolio. Now, that is where one can decide what to do in terms of event risks like the election result or any other event risks that keep coming in and going in. One shouldn't touch the investment part of the portfolio because, as I said, it will always be difficult to time the market. If one is even able to successfully exit, let's say, at highs or close to highs, when the market falls, a tendency tends to come in that no, the fall will come more, the market will fall more, and as a result, the entry becomes difficult. So investment part shouldn't be touched. Coming back to the trading part of the portfolio, yes, one can look at multiple things. One can simply move into cash, given the fact that markets are at a lifetime high, and despite the volatilities, despite the news flow, despite the volatile global money flows, of course, the support of domestic money flow is still there. Market is it's close to life high, and as a result, the valuations are not really cheap. Valuations are on the expensive side. So that's where one can either simply take a call to move a trading part of the portfolio into cash. That's one. Yes, for all the short-term traders, if they want to adopt the suitable derivative strategies like buying a put, they can do that also. So that I think dividing the portfolio into investment and trading and then taking a call will be more sensible approach instead of taking a full portfolio call.
If you, let's say, make a new high in the run up to the election, then what should one do? Take some chips off the table or stay with the trend? They always say, no, trend is your friend. So if the markets are telling you in the run up to the election that there is momentum and then there is constructive price action, should one start buying protection, stay in cash, or remain fully invested? Technically, how would you approach this event?
I'll go with fully invested as
Fully invested.
Absolutely, Nikunj. I think there's no doubts about it because see, you may have residual cash, maybe 2-5% cash. That depends on the kind of opportunities which the markets are showing, right? In case if they happen to show post the election results. But the way the construct of the market, the setup across the globe, I think we are into a state of calm across the globe rather than extreme euphoria or any kind of a panic across various asset classes. So I think in that context, maybe this could be an event which could probably play as a catalyst to the current market trend. In case if there is any kind of a correction, I would believe that that should be taken as good buying opportunity. But in case if the market opens with rallies up further, then buying these stocks at maybe another 10-15% higher with an expectation that because then you'll be not left out with too many events. In fact, there could be added uncertainty which could come back into the indices, going into the budget, etc. So I think in that context, staying fully invested over here, riding the trend, and trying to capitalize as much as possible, I think could be a better strategy.
We always say, okay, remember when markets did not like the verdict, it was circuit down. Remember when markets liked the verdict, it was circuit up. But there is one big difference, and that one big difference is that time the size of the market and the size of the market is different. Sensex,
and the positioning also. I mean, there's been so much DII buying. We're 250 points away from the all-time high on the Nifty, which is nothing.
What is the total outflow of FI this year? 1 lakh crore. 1 lakh crore and market is at an all-time high. So 1 lakh crore somebody sold and somebody is bought. That is the kind of absorption power what markets have at a domestic level. B, the level of the market is different. That time you were competing with US, that time you're competing with China, that time you're competing with all other crazy forces in the world in terms of financial market. That's the second part. Third, what many folks don't realize is that in 2009 the election verdict came on a Saturday. Yeah, the election verdict came on a Saturday. And then Monday when markets opened, SGX had already rallied and SGX was not liquid. So you had the counter market which is SGX, the market reaction had to be in proportion with SGX. Nobody got a chance to trade. Everybody loved the election verdict, and then Monday morning when you came back, the SGX was up. So the depth was not there, and that in a sense acted as this real rocket kind of an impact on the market. So the markets were different, approach was different, liquidity was different, trading conditions were different. So I really don't expect whatever may be the verdict. I mean, let's hope that markets like the verdict, but whatever may be the verdict, all this false
It's not going to be a circuit day.
Yeah, that is my view.
In fact, one of the trivia which I remember in 2009 was we had a circuit day on Monday. I think the timing was 9:55. And in fact, so 9:55 the markets opened, and within 1 minute I think it was up circuit. And the next day on the SGX Nifty we were up another 20%. We didn't open 20% on the Indian markets, but I remember it very clearly that day.
Yeah, the market hi alag tha, boss. There's a different market.
What was the Nifty level in 2009?
I think 3,700 or 4,400. Yeah.
It was a very shallow market then.
Since 2003, I distinctly remember I was in media that time covering markets, and the Sensex was at about 4,500 or 5,000. We'll have to check the numbers here, and the market did not fall on that day. On the day election verdict came out, the markets did not fall. It was after a comment which came from one of the winning parties. In that case, it was CPIM that time. They made a comment on disinvestment, and the next day, market had traded. And the next day it went circuit down, that too after 15 minutes of trade. But the depth was so different. I mean, you're talking history here, just to remind our viewers that, boss, I mean, history does not repeat itself in totality. Whatever may be the verdict, I hope markets like the verdict, but I'm not expecting like an earthquake. It is not going to be in financial Armageddon that circuit lag gaya ghar jao. I don't think it's going to happen like this. Kunj, what do you
He'll
think?
still not be able
Exactly.
to go high hopes. But
Kunj, what do you think?
Yeah, so you have already, all of you have together discussed the issue threadbare. I will probably not be able to add anything incremental to this except to say that for a short-term trader, of course, he has to keep his stop losses in mind. He has to go with technical patterns and other things. Given the fact that market is, as we have been repeatedly discussing, close to lifetime high, market is building in a lot of expectation. And it might so happen that irrespective of the fact that whatever comes out after the event risk, that is the election result, even if the result is in line with the expectation, there could be some money being taken off the table purely because of the fact that, as I said, in anticipation, market is already at a life high. People probably are carrying short-term position into the event in expectation of something which is has been built based on the opinion polls that came out earlier and subsequently news flow and all. So in either case of the event, whether the government formation is in line with broader expectation that is there based on the opinion polls and other news flow, or if it is not in line with that expectation, in either case, there could be money being taken off the table. The fact remains that Indian market, in terms of market capitalization, in terms of liquidity, in terms of participation of global and domestic investors, is now much more deeper than it used to be earlier. And to that extent, the impact may not be sharp either way.
Right. So while we've been talking about the market construct, when you compare it to the previous poll verdicts and all, Aisha, one key data point that's come across is the fact that the total market capitalization of BSE listed stocks has now risen for the first time ever above the $5 trillion dollar mark, and that's on an intraday basis. Apparently, that $1 trillion recovery or the surge has happened in only a period of 6 months.
Beat that. All with the FIS selling, we've still managed to do it. But still in the thick of earnings as well, I know we're completely hung up on what the election verdict is going to be and what the election portfolio should look like. But earnings, and let's take it across to Srishti, find out what to expect from Sun Pharma. Okay, we'll do that in just a bit. But Naresh, just as a trend, what is it that you see for pharma? I mean, a lot of the stocks have already moved up, but anything that's looking interesting for a buy right now?
So first is Aurobindo Pharma, which has broken out into a new all-time high, consolidated well around this 1150, 1180 resistance and has broken out. So that looks promising for a move towards 1300. Second is Sun Pharma. For the last few sessions, it was in a very tight range. Say roughly 1540, 1550 was a resistance, has crossed that today. So that looks like a short-term breakout, which could again go back to 1630 levels. So Auro Pharma looks interesting, and next is Sun Pharma.
Looks interesting, and that one has hit a fresh record high level on an intraday basis today, as well as Sun Pharma. But let's get your BTST ideas then. Kunal, what's yours?
So the first one is about DV Slab. After quite some time, the stock is inching towards a breakout, swing breakout about that 4,000 plus mark. So it's suggest a buy with a target of 4,100. Stop loss could be kept at 3,950. And dollar indices is something which has been very strong in terms of a trend over the last 6 months, 1 year or so. Crossing the level of 630, would suggest a buy with a target of 684. Stop loss at 620.
Right. Naresh, what about your BTST trades?
So first would be a buy on JSW Steel, which has broken out into new all-time high. Stop loss at 920, target price of 945. Second is a buy on BPCL, which has given a short-term range breakout. Good volumes today. Stop loss at 640, target price of 660.
Right, okay. Besides the markets, the other thing which has been soaring is temperatures across country and in particular North India. In fact, mercury has once again breached 47 degrees Celsius mark in parts of Delhi already. The IMD has issued a red alert for the next 5 days in the national capital, despite the mandated summer vacation between May 11th and June 30th. The Department of Education has learned that some schools are still operational, and it's not just Delhi. Punjab, Haryana, Chandigarh are also all reeling under a severe heat wave and have had a red alert warning issued for them. In fact, in Punjab, schools have closed with temperatures reaching 45 degrees Celsius already. Nikhil from our network joins in with the latest updates on the same.
Harsh weather conditions are currently being experienced in parts of the capital city. If we talk about the temperature in particular, it has reached to a level of 47.4 degrees Celsius, which is the highest recorded so far for summer season for the year 2024. Back in the year 1998, that means 26 years before, the temperature highest was recorded at about 48.4 degrees Celsius, and it appears like for this summer season it is likely to cross all the previous records. As far as the IMD is concerned, they have already mentioned that the intense heat waves are likely to continue for next few days, and also there is no respite which is expected from the side of the weather for next a week or two. That means similar condition and the scorching heat, this is something which has to be experienced by all the people who are residing in part of the NCR city. The schools in Noida, Ghaziabad, Delhi and Gurugram, they have been asked to remain shut for summer vacation by the state department and the district authorities until further orders. And this is something which is applicable for all the classes, all the boards.
All right, thank you so much for that, Nikhil. And definitely the heat is soaring, no doubt. In Mumbai, the temperatures, yesterday there was a yellow alert, but it just feels like 45, even though it is 37 degrees. But let's take it across to Shrishti, who's here to take us through the earnings, what we should pencil in when it comes to Sun Pharma. They all set to report their numbers. And Shrishti, what should we expect?
So we're expecting a decent trend from Sun Pharma, because though on a sequential basis we are not expecting a significant jump, but on a YY basis there could be a double-digit growth for Sun Pharma, and all eyes will be on the US sales this time around, because for US we're expecting a growth of 16% on a YY basis, and we are expecting the number close to be $500 million, and the push could once again come from the specialty sales portfolio, and the key to watch will be the contribution from the G-Rev limit as well. But apart from that, in the domestic business, we are expecting a growth of 10% on a YY basis, and actually factoring in all of these into the numbers, we are expecting a revenue close to 12,522 crores. The EBITDA is expected at 3,240 crores, while the margins expected at 25.9%. And lastly, onto the profit figure, though on a sequential basis there could be just a flatter sort of a growth, but on a YY basis a 31% jump onto the profit of the company is what we are expecting at 2,602 crores. But apart from the numbers, the key to watch will be the management commentary and the update on remediation of the Halol and the Maholi sites. Other than that, the outlook on their R&D spending as well. So, and how are they seeing the outlook for the specialty sales, not just in US, but in the rest of the markets as well. So all of this we will be eyeing on the management commentary, but this time a decent set expected from Sun Pharma. The US sales as well as the margins are key to watch.
Thank you so much for that, Shrishti. Definitely watch out for Sun Pharma numbers. And yes, remember that if you talk about the pharma space, Nuresh is liking Sun Pharma along with Aurobindo Pharma. Kunj, what about you? How is the pharma space looking to you right now? Attractive space. Also, what's exactly happening with select pockets of pharma names, be it Aurobindo Pharma, because a year ago, the stock was hovering around levels that was sub 500 rupees per share. Now it has surpassed 1,200 rupees.
So as a portfolio strategy, obviously in a market which is at a close to lifetime high and which is moving into an event, event risk, if we want to call it that way, it is always advisable to tilt the portfolio towards the defensive sectors and stocks. And pharma obviously comes into the defensive sectors, along with the consumer space, let's say mainly the fast moving consumer goods, the consumer durables, non-durables space. Of course, having said that, we have to keep in mind that after a reasonably long, quite a number of 4-5 years plus of underperformance by pharma, it's for the last few months that pharma started performing again, partly because of the continuous inflow, which then on an incremental basis looks for the sectors which are undervalued and which have not participated in the market. So pharma fitted into that. Of course, there was some improvement in the financial numbers of the companies also. So that's the other reason that pharma came into the buying radar of various participants in the market. And that's where we have seen the outperformance. Probably we could continue to see it going forward. In fact, if at all we want, let's link it to the fact that we are running through the heat wave and all other things. So if we go and recall, hardly till about maybe few months ago, consumer durable space of all these companies which are electrical and electronic equipment manufacturers, air conditioner manufacturers, air coolers, refrigerator manufacturers, nobody was looking at that sector. Suddenly that sector kind of gave 30-40% return. So that's the kind of things that might happen. Again, coming back to the event risk, as I said, one has to look at the defensives and also the fact that non-participated sectors. So on IT, let's say we are indeed clearly having pressure of performance on the companies in terms of results, in terms of top lines not being growing. But at the same time, sector has corrected significantly, and depending on how things shape up, might see the buying interest coming back.
The other thing is, an election strategy. Are you sitting on some amount of cash on the sidelines? Are you fully invested going into the event? What's your strategy?
Yeah, sorry, if the question is to me, I couldn't hear it properly.
Yes, Kunj, to you. Just wondering what the big June 4th event outcome, or rather event strategy is. Are you sitting on some cash on the sides, keeping some powder dry to invest, figure out which direction the market takes, what the directive is really after the verdict, or are you going into the event fully invested?
Yeah. In the face of an event risk, it's always advisable that instead of taking an overall a call on the whole portfolio, one segregates his portfolio into two buckets. One is the investment bucket. Let's say in the absence of any other factors, I can probably put 70% of the portfolio to be kept in investment bucket, which should be for medium to long term, because if there is no correction in the market, it will be very difficult to time it and to get an opportunity to get back into the stock. The other bucket, we can call it trading part of the portfolio, which if we have put 70% in investment, that will leave 30% of the portfolio as trading part of the bucket. That is where one can take a call in the event risk, and given the fact that in terms of the valuation, we are as a reasonably matured to, let's say, higher than the average level. In terms of indices, absolute numbers, we are close to the lifetime highs. We are indeed seeing some actions in terms of macroeconomy being kind of, some being supportive, some being non-supportive. In terms of non-supportive, inflation still remains a key monitorable. The interest rate reduction, which was expected mainly in the US market, seems to have got pushed back. In India also, we have to watch it. And global market, global inflow support is not there. Of course, domestic inflow support continues to be there. So all these things putting together, the fact that market is at a high, one would probably can be advised to take some money off the table only from the trading part of the portfolio, and be in cash as one goes into the event risk and takes a call post the event.
It's always good to have you on the show. We'll let you go on that note.
If you like this video, then like, share and subscribe to ET Now.